choose a bank for your nonprofit? I'm going to give you 5 things to consider. Let's get into this one. Hey y'all, this is Tiffany with Boss on a Budget. I help people start their nonprofits and raise money from the ground up. I have a private accountability group where nonprofit founders, we meet every week to talk about fundraising and to get different fundraising tips and challenges to help motivate you to make money for your nonprofit. If you'd like to join that community, comment join below and I'll send you the link. I want you to watch to the end of the video because I do have some advice for how to approach this whole process of picking a bank. So here are 5 things that I would consider when trying to figure out who I should bank with for a nonprofit. The first thing is location. I would try to figure out if I want a local bank or a national bank. And there are pros and cons to both. And so in this whole video, I'm going to be sharing pros and cons, and you just need to figure out what makes sense for you and what matters for your individual situation. I would never say, hey, get this bank over any other bank, because everyone's situation is so different and your needs may be different than someone else's. So I want to give you the information and you can go from there. So one advantage of banking with the local or regional bank is that they tend to understand the local area better. So for example, maybe you're trying to get some real estate or buy a property. So they may have connections to realtors or real estate brokers, and that relationship can make you look more favorable to one of those parties. So maybe you're working with a local realtor who has a relationship with the local bank and they're more willing to work with you because they've done a lot of transactions in the past. And it could be the same vice versa. You're working with a banker and they may have a list of local realtors or brokerages that can help you, and that can help you make better decisions about how to move forward with people you want to work with. One advantage of using a local bank could be that they may have a tighter connection with the community. So they may do charity runs or walks, or they may have local events that they do for local community members. And it could be an opportunity for you to get to know them better and have better relationships, which translates into better customer service. A lot of people say that when you're banking locally or banking, with a regional bank, you can go into the office and have a much better experience, or you can go into the branch, I should say, and have a much better experience than with a national bank. So the flip side of using a national bank is, first of all, they have a lot more money and a lot more assets because they have a bigger scope. So they may have access to different products or benefits or services that are different than what a local bank can provide. And I'm going to break down some of that in the other points too. But you may be just interested in the types of services or types of deals that a national bank can give you because they have the freedom to do that kind of stuff because they have more money to work with. Another advantage of working with a national bank is that they may have more branches. So if you do need to go to a local branch, there's more opportunity to do that, or they may be closer to you because they have more branches versus a local bank that may only have 3 or 4 branches that aren't necessarily close to you. One thing I do want you to think about is no matter who you bank with, if it's a local or a national bank, get to know your local branch, because a lot of times they provide grants to the local area. A lot of times the manager in the local branches have access to funding and they can provide support for grants for your programming. So you want to get to know the people in the local branches regardless of the type of bank that you work with. Another thing you want to think about is whether you want to do online banks versus brick and mortar banks. And so a brick and mortar bank is just basically a bank that has a physical location. You can actually go there. So this again is personal preference. There are some people who don't need a lot from their bank. They just want to do basic deposits and withdrawals. They probably don't want to do a lot of business with the bank. They may not be interested in loan products or things like that. And they just want something simple that doesn't have a lot of fees. So they may go with an online bank because that's the advantage of using an online bank. A lot of times, because they don't have to worry about overhead, they don't necessarily charge certain fees, or their fees aren't as high because they don't have to pay overhead. They don't have to worry about paying rent and paying utilities and things like that. And they may get away with a workforce that's probably cheaper to hire, right? So they pass those savings along to you, and it could happen in fees or in other benefits that may be provided. But the thing to remember about online banks, a lot of them are newer. So they may be smaller, they have less assets, and you just want to check out and make sure it's actually a legitimate bank. Now, I'm not a banker. This is not my background, but I want to just provide some general information. One thing you want to check out is if the bank is FDIC insured. FDIC stands for Federal Deposit Insurance Corporation. And the layman's term, like the most simplest way I could break this down, is that if the bank is FDIC insured, that means deposits up to $250,000 are insured. So if the bank goes under, you have insurance on the money you deposited and you won't lose out on your money. And this is a direct result of what happened in the Great Depression when banks collapsed and people lost the money that they were storing in banks, which is why people started putting their money in their mattresses because they didn't trust banks. So if a bank is FDIC insured, then up to $250,000 is insured in case the bank goes under. You want to make sure that whatever bank you're using is at least FDIC insured, or the deposits are insured. You also want to think about things like transactions. They may limit transactions, or how do you deposit your money, or how do withdrawals happen, right? So if you need to get a withdrawal, do you got to go to a certain bank? Are they connected to a bank network? Do you have to wait till money is transferred and that takes longer? You know, you have to think about the implications on your everyday business transactions, everyday interactions you may have with the bank. But the biggest one is, how do you access your money and how quickly can you access your money? So those are things to just think about with online banks, and just make sure that you feel secure and you feel safe with using the bank that you choose if it is an online bank. Another thing you want to think about is whether or not you want to go with a more traditional for-profit bank or a credit union. So a credit union is basically a non-profit bank, which means that its purpose is not to make profit. Its purpose is to serve the needs of its members. So that's why when you see people talk about credit unions, you have to be eligible. You have to be a member. And once you're eligible and you're able to be a member, you are a shareholder. Nonprofits don't have shares, but you are a member of the actual bank. So you can make decisions on who sits on the board. You have voting rights. That's why you'll get information in the mail about decisions about who serves on different boards or who has different offices, because you are a member and you have a say in what happens with that credit union. So a credit union is a nonprofit bank. And the difference of most credit unions, most of them, is that they tend to have less assets than for-profit banks. Because again, their goal isn't to make more money. Their goal is to serve the needs of their members. So they may not acquire as many assets as, say, a Bank of America might, because that may not be a singular focus for them. But the benefit of having credit unions, people do see that they get lower rates for things like car loans or other mortgage loans or other loan products that are available. And there may be other benefits and services that you can have access to being a member of a credit union. Being a member of a credit union can get you discounts for other services like insurance, because there may be partnerships or things that the credit unions have that you wouldn't be privy to or have access to if you were not a member. The other thing about credit unions is that they tend to have a more personal touch. So the point I was making about local or regional banks versus national, most credit unions are locally based and are regionally based. There are some that are pretty big and pretty national, like Navy Federal, but most of them are like regional or locally based. So that means that there's more of a personal touch. That means you can develop a relationship with the people who work there, and they can get to know your file, get to know your circumstances, and understand your needs and work with you to chart a plan for funding or a plan for business credit. The other thing you want to think about is, because credit unions tend to be smaller, they may not have access to all the technological advances that for-profit banks have. So you may have an app with the bank, but it may not function well. Or you may not be able to use Zelle or use Venmo with your account because they may not be tapped into that system yet. Or maybe you're using like an accounting service like QuickBooks, and you want to have an automatic integration where your bank is automatically connected to QuickBooks and it just automatically downloads your transactions instead of you having to enter them one by one or having to download a file and upload it. I'm being very specific because this is very real and personal for me right now. If you're working with a credit union, they may not even have that integration with QuickBooks, so it can't be automatic. Or if they do have an integration, it's real glitchy. So that's just some things to think about when you're thinking about the size of your bank as well. And typically with credit unions, they're smaller and they don't have all the bells and whistles that national banks may have or for-profit banks may have. The next thing you want to consider is just what's the cost of maintaining an account with the bank. So every bank is different. So people ask me all the time, like, oh, this bank wanted me to supply this, but I don't have it. What should I do? And I tell people, well, every bank is different. So if you don't have what they need in order to get an account, then look for another bank, because that next bank is probably going to ask for something completely different, right? So to that point, every bank has a different set of services or costs or fees, and that absolutely needs to be taken into consideration when you're deciding what bank to use, especially if you're a startup and you're not bringing in a lot of money. Do you really want to pay $15 a month just to maintain a bank account when you can have the same kind of bank account, maybe less bells and whistles, but you may not be doing a lot anyway, and pay nothing a month? So think about the cost of maintaining the account. The other thing you want to think about is there a limit on the number of transactions? And how many transactions are you anticipating, right? So if you're doing a campaign and donors are individually donating to you, and those are coming in as individual transactions, is your bank going to limit the number of transactions you can do every month, or you can allow every month? Or maybe you're using a payment gateway and that payment gateway is collecting it and they're just doing a bulk deposit into your account, so it may not matter, right? Like, these are the little things you want to think about. What are the number of transactions you're going to be using? How many times are you going to be paying for things? Because banks do limit the number of transactions, or they may charge once you surpass a different threshold, right? So think about how you're going to use the account, what you need it for, and what are the associated costs. Just read the fine print and ask plenty of questions of your banker so you understand the costs that happen, and then some of those hidden costs or invisible costs. What will it cost for overdrafting? What will it cost for you to order debit cards, right? Or to order checks? These are things that may matter to you. What does it cost to withdraw from ATM? Now, as a nonprofit, you probably want to limit people who have access to withdraw cash, because that could be a liability and a risk for people just taking money out of the account. So obviously you want to limit the number of people who can do that. But is that a need for you? Do you need to access cash a lot for whatever reason, depending on the nature of your work? Then that matters too if you deciding and picking the type of bank you want to work with. The fifth thing you want to think about is what are the services or products that you want to use, and you want to think about long term as well. So you may not be thinking about a loan right now, but there may come a time when you may need a loan, right? So a perfect example is the COVID pandemic. The SBA, the Small Business Administration, provided access to a very low interest loan, but people had to go through their banks. And if their banks had experience with SBA products or had relationships or were SBA friendly, then you had a better time navigating and accessing those loans versus other banks that didn't. Are you interested in business lines of credit? Are you interested in business credit cards? Do they provide the kind of services that you probably will need later on? Because it's really important for you to have a relationship with a bank or a financial provider when you are applying for their services, because they may view your case or your file more favorably, and especially if they know you and have a personal relationship with you. If you are on a first name basis with your banker, then the likelihood of you being accepted or awarded some of those products is higher then if a bank doesn't really know you, there's no relationship there. So when you're picking a bank, also think about, oh, I know later we probably want to access lines of credit, or we probably want to access, different things. Then I know that this bank has those kind of services or has access to these benefits, and I know I'm going to use them later. So you also want to just take inventory of what you may want to access later and make sure the bank has that. So here's my piece of advice for picking a bank. First of all, take inventory of what your specific needs are. Take inventory of what your needs are now and what they potentially may be 3-5 years down the line. So your needs right now may be small. You may not plan to raise more than $5,000 this year or more than $20,000 this year. And you know that a lot of that's going to come maybe through transactions, maybe 5 a month. And you don't really want to take cash out the bank. And you're probably not going to be writing checks. You're probably going to be doing a lot of things maybe through a business credit card because you want to get points, right? So think through all the different ways you want to use a bank and write those down, because those will help you figure out, okay, if I know I want to access business credit and I know this bank is really good with business credit and they have favorable interest rates and they accept people, like they have a lower threshold for accepting people, then I'm going to go with them, right? Or maybe you're going to go with an online bank because you don't need to really access your money. It's going to be kept all in an online space, and it doesn't matter that if you need to access it, it'll take a couple days for you to get it, right? All of these matter to some folks and don't matter to other people. So you need to know for yourself what your needs are first. The other point I just want to make is that you're not bound to have one bank account. So you may access one bank for a specific benefit and bank there, and then you may have another bank where you use it for a different purpose. Maybe one bank has really great savings interest rates. So online banks, they tend to have really great interest rates for savings accounts. So maybe you want to have a savings account or a high yield savings account, and you know it has a really good interest rate, and you're just using it for that. You're not using it for checking or transactions. And then you have another bank that's more local or more regional because you know you want to get loans and you just want to develop relationships because you're trying to get grant funding from that bank, right? Or you know that there are 2 big regional banks, so you want to have accounts with both of them because you want to get funding from both of them. And so one account may be, this is where you deposit all your grant funding, and another account, this is where you deposit everything else. I'm not an accountant, so I can't advise you to do these things. I'm just giving you examples of what nonprofits have done. And all I'm saying is you're not bound to one bank account. So if one bank has a benefit that you really like and another one has a different benefit, then you could potentially go with both. Make sense? So do you have any other advice for how to pick a nonprofit bank? Please drop it in the comments below. I would love to see your suggestions. And if you need help with starting a nonprofit and raising money, you can get help at bossonabudget.com. Just visit my website and there are resources there for you. Thank you so much for watching, and I'll see you in the next video.